In this video, we're going to be going over 4 reasons that insurance can be a scam. The first reason is agents tell you not to make claims because it hurts their loss ratio. So when an insurance company hires an agent to sell for them, they are incentivized to get you to not put in an insurance claim because the insurance company uses their loss ratio as a metric to see how good and how much business they write, aka how profitable they're making the insurance company, right? So if you call an agent, you're like, hey, look, this happened. I had a fire at my property. I need to put in an insurance claim. If it's a low dollar amount, you probably don't want to put in a claim, but the agent is also incentivized to tell you not to put in a claim and to work around how you can do it how you can fix the issue without putting in a claim. So agents are working for the insurers to a certain extent. So that's one thing I want to mention. So the loss ratio, again, which is a metric used by a lot of insurance companies to figure out how profitable an agent is, it's the loss ratio equals the incurred losses divided by the incurred premiums. And by premiums, I mean dollars collected in exchange for insurance. So if you pay your insurance on a monthly basis, you're paying a monthly premium. Premium means dollars from the customer. So loss ratio equals incurred losses divided by incurred premiums times 100. We're just multiplying it by 100 because we're trying to change it to a percentage. So let's go over a loss ratio example here. So $60,000 would be the incurred losses. So I'm an insurance agent, and this year I had $60,000 of losses paid out to people that put in insurance claims, right? But I wrote $100,000 in business, so I collected $100,000 in exchange for insurance. Multiply that by 100, my loss ratio would be 60%. Insurance agents can choose whether to write business or not write the business. So let's say I'm looking for insurance on my rental. I own some real estate. I have some properties that I rent out. They're called rental dwellings. So let's say I'm looking for insurance on my rental dwelling property here. But so I submitted an application. The insurance agent runs my consumer report, and they see, okay, you've had 2 claims in the past 3 years. You're pretty high risk. There's a good chance that you put in another claim. The insurance agent can choose to write that policy and take your money and insure you, or they can choose to say, nope, we don't want to insure you. You're too high of a risk. We think you're going to put in another claim. That's going to hurt my loss ratio, and I don't want to go down that road. So agents have a lot of freedom within there to kind of pick and choose who they insure, who they don't. They want to insure less risky people with steady jobs that are going to pay their insurance payments on a consistent basis, right? So that's a little bit about how an agent gets incentivized to tell you not to make claims. Number 2, if you put an insurance claim in because you get in a car crash or have a fire at your house, your insurance cost will go up. So this kind of ties in with the last point here. Insurance companies are in the business of making money, right? Just like any other business. If it's a private company, they don't have to report earnings to investors and shareholders. If they're a publicly traded company, you bet they have to report earnings, right? So it's always a company's best interest to companies are always trying to make investors money, right? So everything is about money in business. So let's say you have a vehicle and it's worth $100,000. You put in a claim for $100,000, right? You just lost the insurance company $100,000. So what are they going to do to get that $100,000 back? They're going to increase your rates. You're going to pay more for insurance. Even if you go to another company, you're still going to pay more because that's now on your consumer report. That claim is on your consumer report. So you're going to pay more because the company that paid you needs to recoup their money. And you're more of a risk to other insurance companies, so they're going to charge you more. And maybe even before this $100,000 vehicle claim, you went 5 years paying $2,000 a year for insurance, 5 years times $2,000 a year for car insurance, that's $10,000. So let's say you paid the company $10,000, but they just paid you $100,000 because you totaled your car. Their net loss is $90,000, right? That's how insurance works. So you're going to be paying quite a bit more. Now, let's say you have a fire. Let's say you have a home insurance and you have a fire. The house burns to the ground. And you've had this house for 20 years with the same company, and you've been paying $3,000 a year for 20 years. That's $60,000 that the company has collected from you. But you just had a fire, house burned down. They paid you $800,000 cash, cold hard cash. Here's $800,000. We're sorry that you lost your house in a fire. They're going to have to raise your rates significantly to recoup that $800,000. That's a big loss. They're going to have to drop you, and then you're going to go to a different insurance company, and they're going to see on your consumer report that you recently had an $800,000 claim. They're going to charge you more. So again, insurance companies are still in the business of making money. Number 3, the lower your credit score and the riskier your credit profile is, the more expensive your insurance will be. So this kind of goes in line with the consumer report, which we talked about in the last slide, but many people do not realize this. Lower credit score often means erratic payments, and the insurance company actually has to spend more money chasing down your payments. Now, that's not the only reason, but I do want to touch on this here. Like, a lot of the times people pay for a month of insurance, but then the next month comes around and they don't have the money, so they skip the payment. And then the insurance company has to go chasing them, asking them for money, and doing all this admin work. They want quality people that are going to be paying monthly without any headache. They have steady jobs. And that's what credit score is indicative of, right? It's like, how solid and how consistent are you at paying your bills, right? So if you have a low credit score, you're much higher risk. You probably don't have a steady job. You might even be driving without insurance sometimes, letting your insurance lapse. You might not have had insurance previously for the year. Therefore, you're more of a risk. So insurance companies like to see steady payments, consistent coverage. If you start, stop coverage, really not good. That's going to increase the amount you pay for insurance. If you're switching insurance companies over and over and over again all the time, not the greatest look. That's going to raise your cost of insurance. So they respect loyalty. They respect good credit scores. They really like people that are low risk, right? They don't want to be paying out $100,000 claims, $10,000 claims here, even $2,000 claims, right? Like new windshield, $1,500 claim. Does the insurance company want to pay that $1,500? No, they don't want to, but they build it into their premiums. That's why they charge what they charge. But again, they're in the business of making money, and they make so much money, it's not even funny. 4, oftentimes people never use their insurance and have paid tens of thousands of dollars to insurance companies and never needed any money from them, right? So this kind of goes back into some of the examples that I talked about. Let's say you own a home, you've been paying $3,000 for insurance for 20 years, same company. You paid in $60,000 but have never had a loss, right? That's totally, like, that's reasonable. There's a lot of people that their entire life will never have an insurance claim. But let's say the average person, I don't know, let's say they live till 70, right? Somebody lives till 70. By the time they're 30, they have a house. So from 30 to 70, that's 40 years. Let's say they pay, let's just say 2,000 for easy math. The average, like if somebody pays $80,000 over their lifetime to an insurance company for home insurance and never have a claim, that's $80,000 of quote unquote profit from that individual that the insurance company made. And there's many, many people like that. And the crazy thing about insurance is risks and accidents are unknown. So you never know if you will have a claim or not. That's why insurance is using the law of large numbers to mitigate risk. And so that's why some people have a lot of claims, some people don't have any claims, some people are in the middle with 1 or 2 here and there. But you can't just get insurance after you had an event where you wish you had insurance, right? So like insurance needs to be in place prior to the event happening. You can't have an event, an issue, or a fire. You can't have a fire burn down your house and then go to an insurance company and say, "Oh, by the way, I want insurance." Like they're not going to cover that, and that's not how it works. You need to have it up front. So Insurance is an interesting business model in the fact of like we are insuring for the unknown. Very interesting topic. But these are 4 reasons here why insurance is a scam. They're profiting billions of dollars, turning down claims, legitimate claims. It's just a crazy scenario, and I wanted to share some insight with you. Hopefully, this was helpful. Like and subscribe. Trying to grow the channel here, and we're going to be posting more content like this. I have a podcast that's very frequent as well. I'm doing a lot of episodes on there. And if you do need insurance quotes here, I'm an insurance agent, and it's I think insurance is a scam. How often do you have an insurance agent that thinks insurance is a scam? I offer a very unique perspective. If you're looking for a quote on auto, home, health, life, whatever the case is, I'm here for you. Look at my description on the video, and that's how you'll be able to find me and contact me. Cheers, guys.